Hi everybody, let's quickly have a look at gold. We're on the monthly chart, as you guys can see, and the first thing that I can see in regards to the monthly chart of gold is the fact that price has given us a very nice M structure over here, as you guys can see, with this side being the first leg of that M structure and this side being the second leg, right? To add to that, can you guys also see that the neckline of this M structure has been broken at this point? I hope you guys can see that. Let me just actually use the crosshairs so you can see that properly. Can you see that the neckline has been broken, right? And it has been broken by this candlestick over here, and this is an indication that there's a very big chance that price will push further down and at least to this level over here. Why do I say this level over here? Number one, it is a very strong level of support. As you can see that we had multiple rejections at this zone. Number two, we have this candlestick over here. If I can just zoom in a bit, let me just zoom in a bit. This candlestick is what we call a liquidity candlestick, as it is a bearish candlestick with a small body and a long lower wick. So at this level over here, we have a whole lot of liquidity at this point, and the market needs to come down to grab that point sooner or later. And as I've said in the past, liquidity is money that needs to be grabbed by the market. So what I'm going to do now is just add a neckline to that M structure. So just bear with me while I do so. Let's see. So there goes our neckline of that M structure, and as I said, it has been broken to the bottom side. There we go. Right, the next thing that I'm going to do is to mark that liquidity candlestick, because it is also very much important. And remember, it is also a very strong level, or rather it is at a very strong level of support, as you guys can see. Let me just also mark that support area because it is very much important. Just bear with me, guys. Let's see. Okay, so we can say that this is our support area, right? It's a very nice structure in my humble opinion, and I would say that if you get a very nice entry, I would say hold on to it at least until price reaches this level over here, at the very least this level over here, right? But ideally, if you can, I would say that hold up until price reaches this point, right? Because it's a very important area, and it's carrying a whole lot of money at this point, which needs to be triggered by the market, right? So let's proceed. So just to proceed, what I would love to see happen next is for price to push slightly down and then head back to the neckline to test it. And at the neckline is where I would look for potential selling opportunities, and my take profit would be this level over here, right? And I've explained why this would be my take profit area, right? Anyway, let's proceed. So what else do we see in regards to the monthly chart of gold? Another thing that I want to point out is the fact that we have this candlestick over here. It is last month's candlestick, and it is a bearish candlestick with a small body, a relatively small body rather, and a long lower wick, which tells us that where that wick ends at the bottom, we have a lot of liquidity at that point, and the market needs to push further down to come and grab this liquidity over here. I hope you guys can see that, right? Another thing that I want to point out is that there's been a lot of talk by various people saying that this breakout is a fake breakout, right? This breakout out of this M structure is a fake breakout, and that the market will correct itself over the next couple of weeks and even months, right? That's also a possibility, and the reason why I say so is because if you guys have a look at these candles over here, we have 1 2 3 4 5 6, we have 6 strong bearish candles going down, and it may be that it's a trap, right? So we just need to keep this in the back of our minds, because remember, guys, when it comes to W structures, or rather M structures rather, people sell on the second leg of that M structure. So people sold here and they put their stop losses just above that structure. So there are many stop losses just above that structure, right? And as these candles over here have been moving down, right, more and more people have been buying, or rather selling, and putting their stop losses just ahead, right? To add to that, right, keep in mind that we had this W structure over here. And similar to M structures, when it comes to W structures, a lot of people buy on the second leg of that W structure and they place their stop losses just below, right? So similarly, we have a lot of stop losses that are sitting at this point, and it may well be that this entire move is actually a stop hunt to come and grab all the stop losses that are at this point, and then we might potentially see a reversal of sorts, right? So I'm just showing you all the possible outcomes, right? And another thing that I want to point out is the fact that we have this candlestick over here, right? And it is a bullish candlestick with a small body and a long upper wick, and it tells us that at that level there's a lot of liquidity there. So it would make sense actually for price to push down to grab all of those stop losses that are sitting there, because those stop losses represent money, and then for price to continue to go up to trigger the stop losses that are at that point as well, right? So I'm just showing you, as I said, the possible outcomes, and we just need to be careful and make sure that we react based on what the market does, and we don't try to predict so much, right? Anyway, let's proceed. So from here, what I'm going to do is head down to the weekly chart. However, before I do so, I just want to stress that this level over here, right, price needs to reach this level. We just don't know when it's going to happen, but price needs to reach this level because of this candlestick and the fact that it's a very strong level of support. Anyway, let's proceed. So here we are on the weekly chart. Let's have a look. What do we see on the weekly chart, guys? What do we see on the weekly chart? Let's see. Let's have a look. Let's have a look. Let's have a look. Let's have a look. So on the weekly chart, remember, or just to go back to the daily chart or the monthly chart. Remember on the monthly chart, I said that price at this point in time is at a strong level of, or rather, price has closed below this level, which was support but is now resistance, right? And I said to you guys that there's a big chance that we might see price push further down, right? To add to that, can you guys also see that we have another overextended M structure over here, which has a neckline at this point as well? The neckline of that overextended M structure has also been broken to the bottom side, and we saw price heading up to just retest that neckline. And it's an overextended M structure because the first leg is higher than the second leg, right? And as I said, the neckline has been broken and price went to the neckline to test it. And guys, should this week's candlestick close as a bearish candlestick, chances are we will see price push further down. However, should it close as a bullish candlestick, sorry, let me just repeat that. Should this week's candlestick close as a bearish candlestick, chances are that we will see price move further down. But should it close as a bullish candlestick, we might potentially see a reversal of sorts, right? So we just need to be careful. And what I'm going to do now is also just add a neckline to that M structure that I just spoke about. And I just hope that my lines are not too confusing, but just bear with me. I'll just make it a different color. Let's see. Just bear with me. Let's see, I'll make it an orange. Just bear with me, guys. Let's see. There goes our neckline, right? And as I said, it is the neckline of this M structure over here. Let me just draw it again. Just bear with me, guys. It's the neckline of this M structure over here, right? Anyway, let's proceed. So what else do we see, guys, in regards to this weekly chart of gold? Another thing that I see, guys, is the fact that this candlestick over here is a liquidity candlestick. It is a bullish candlestick with a relatively small body and a long upper wick, which tells us that we have liquidity at this zone, and what may happen is price may push further up to grab that liquidity and then potentially push further up some more, right? Anyway, let's proceed. I don't see much at this point in time, so what I will do is just head down to the daily chart. Let's see. So here we are on the daily chart. Let's have a look. So what do we see on the daily chart? In fact, before we continue, I just want to start off by adding my daily channel, so just bear with me while I do so. Let's see. Let's see. Just bear with me, guys, as I look for my equidistant channel. There we go. Right, and I would add my daily channel in this manner for now. There we go. There we go. We just need to ensure that it is accurate. There we go. Right, and let's zoom in a bit. So what else do we see, guys? Remember, just to recap a bit, on the weekly chart I spoke about how we have this M structure over here, which has a neckline at that point. Can you guys see that? Right. Anyway, let's proceed. Just keep that in the back of your mind. Another thing that I can see is that we also have what seems to be an inverted head and shoulders pattern at this point, with this side being the left shoulder, this being the head, and this potentially being the right shoulder, right? However, in order for this particular structure to be valid, we need at least one candlestick on this side to close as a bullish candlestick. Then we can take this particular pattern seriously, right? But for now, I don't take it seriously. We just need to, as I said, wait and see if there'll be a bullish candlestick on this side, right? Anyway, let's proceed. So what else do we see in regards to the daily chart? I don't see much really at this point in time. I don't see much. Let's see. I don't see much really in as far as the daily chart goes. But what I will do is head down to the H4 chart. On this chart, I'm just gonna fix my lines. Let's have a look. There we go, more or less. There we go, right? And what do we see on the H4 chart? Let's have a look. So on the H4 chart, we can see that the market had created an inverted head and shoulders pattern at this point. However, we could say that the move has played itself out, right? So we can just disregard this particular head and shoulders pattern. However, it had a neckline at this level over here, more or less, right? And we can see that price closed below the neckline of that inverted head and shoulders pattern, right? Another thing that I can see is the fact that we had an M structure at this point, which has a neckline at that point, right? I'm just gonna actually add a neckline to that point. Just bear with me, guys. I'll just make it a different color as well, just so we don't get confused. And I just also hope that my lines are not confusing you guys, but I'm just adding all of these lines just to make life simple as we head up and down, to the various time frames. So there goes the neckline of our M structure. So what else do we see? Another thing that I see in regards to this particular chart is the fact that we have a W structure over here, right? And I will take it seriously once it closes above this neckline. As you guys know that when it comes to W structures, rather, you want to see price break the neckline to the upside, come back to the neckline to test it, and at the neckline we normally look for potential buying opportunities, right? So at this point in time, guys, I think it's safe to say that gold is a bit of is in shambles, in my humble opinion. It's too choppy, and anything at this point can happen, right? In as far as the market going up or down, right? But let's just go back to the daily chart, right? Let's see. Just bear with me, right? So in the daily chart again, and remember, daily chart I spoke about how we have that M structure and the neckline at this point, right? And I said that price came back to the neckline to test it, and we expect price to move further down, right? That's what we said on the bigger time frames. However, just bear in mind that on the daily chart we have this huge inverted head and shoulders pattern. But as I said, in order for this pattern to be valid, I believe that we need at least one candlestick on this side to be a bullish candlestick, right? But for now, in as far as buying or selling goes, I would not be making any decisions at this point in time. In my humble opinion, the market is just too choppy, and as I said, anything can happen at this point in time. We might potentially see the market go up or go down, but things are just too choppy for me to make any decisions. But what I would do is I would wait for the daily candlestick to close, because I believe once this daily candlestick closes as a bullish candlestick, then it'll mean that chances are price will move further up, in my humble opinion, right? But in as far as buying or selling at this point in time, I don't see any opportunities. So that's my analysis, guys, in as far as gold goes. Peace out.